Hopefully you can see and hear me okay. Last webinar of the year for us here at Buildxact, and we've got Mick Renton, who's just turned his camera on so you can see his lovely face there, hopefully, and Daniel just there as well. So Mick is the CEO at Xact Accounting. There is an Xact in their name and there's an Xact in our name. Mick doesn't own us. We don't own Mick or the business there. It just happens to be that there's a great partnership and we both got Xact in the name. So obviously with Christmas coming up, the construction industry slows down a little bit. There's been a bit of talk around cash flow. So we thought it'd be great to get Mick and Daniel on to talk about some of the issues that builders face with their cash flow and some of the things that they can do to sort of, I guess, help and aid that to sort of kick them into the new year in a really positive way. Just some little things to cover off. So hopefully you guys all have a little toolbar for your Zoom. So if you have any questions, just pop them into the chat. You can put them into the Q&A, a bit easier for us to scroll through in the chat section. Just remember that when you click on the chat and when you try typing in the message, there'll be a little option that says hosts and panelists or everyone. Just make sure you select that to everyone so everyone on the webinar can see what you're asking. It just makes it a little bit easier for people to follow. Outside of that, there's going to be a little bit of a chat from Mick and Daniel on their side. It's going to throw back to me talking about the Buildxact side and how we can help give you some information from your cash flow and your job costing, and then we'll throw back into a Q&A. But throughout the webinar, just pop your questions in and we'll cover them off. A lot of times people can forget to ask if they don't type them in at the start. And then, don't be shy, ask the questions. We love seeing them. And hopefully you guys get something out of this. And for those that are potentially going to ask, it happens every single time. This webinar is recorded, so you will get a link for this at the end. So don't stress if you missed a bit. You have to pop to the toilet or you're desperate for a cup of tea or coffee. You can rewind that back and you can hear it. So I'm going to throw over to Mick for him to introduce himself and for Daniel as well.
Thanks, Julian. Thanks, Julian. Thanks very much, Julian. And thanks for Buildxact for putting on this webinar this afternoon. Thanks for everyone for joining us. We're near on Christmas, closer than we realise. It's coming very quickly. I'm Mick Renton, the CEO of Xact Accounting, and Xact Accounting specialises in the building construction industry, so we know a lot about the industry and what it's gone through in the last 12 months. We spend our time helping builders try to stay in business and make more money, essentially. And it's been a pretty tough year, given, we're calling it the profitless boom at Xact Accounting because it's more and more people that we look at, more and more clients that we're looking at, they're doing a lot more for a lot less than they were before. With the price of materials and subcontractors moving all of the time, and it's not down, it's up the whole way. So it has been a tough year from that respect. I think 2022 is going to be much better. I think supply chains are going to start to even out a little bit, and the prices are going to slow down. Certainly some of the stuff coming out of the US seems to indicate that the difficulties that the industry's been experiencing over the last 12 months will start to ease off. I don't think that demand's going to ease off terribly over the next 6 to 12 months. We'll wait and see. But 2022 certainly looks a lot better than 2021. However, there are a lot of clients that we have in building construction that are limping to that finishing line at the moment, being the Christmas finishing line. And I think the building industry, more than many other industries, are affected more so by the Christmas shutdown. A lot of people go away for 4-6 weeks at this time of the year, and it's difficult to keep the wheels turning at all. And I think that creates a fair bit of anxiety for a lot of our clients in the building construction industry, because cash flows margins coming into Christmas were very tight anyway. And so of course cash flow becomes even tighter as stage claims are reduced and activity stops or slows down, and in many cases stops. And a fair bit of anxiety then comes about as a result of that. And so we thought, this is the time to dust off a couple of tools that we've got here and maybe get them out to clients and get them out to through webinars and so on. Some simple, really simple cash flow forecasting tools that I've seen used quite effectively over the years. And I've seen clients get into a fair bit of strife and use these tools and manage their way through it. If the worst that comes out of it is you reduce your anxiety, well, that's a really good thing. If the best that comes out of it is you get to the other side and you're of Christmas and you're back into 2022 and you're in good shape, that's a great thing. So at the end of, Daniel's going to run through the monthly cash flow tool. There is a daily cash flow tool as well. Both are going to be available to download. They'll be sent out to everybody at the end. There'll be a link to download with the recording. So just jump on there and grab both of those tools. We're also just going to run through 8 quick levers that we think you can pull if you're running into some cash flow trouble. And we'll quickly run through them at the end as well. I'm going to hand over to Daniel Wilkinson now. He's the better looking chap that you can see right there. He's the head of our CFO advisory team. He has a significant amount of experience working with builders, helping them run more profitable businesses. And he's going to run you through this tool today. So Daniel, over to you, my friend.
Thanks very much, Mick. And yeah, thanks everyone for jumping online this afternoon, and Julian for the warm welcome as well. But let's just jump straight into it anyway. So as Mick has elaborated, we're here to talk a little bit about cash flow. So at the end of this session, there'll be an email that goes out to everyone anyway with a link to this cash flow tool. So you will get your hands on it. So the purpose of this first bit is just to run through the tool, how it works. It is fairly intuitive, and there's a few tabs on here. And look, there's like little sneak comments and a few other like little helping hints all over it. But as always, look, if you run into a bit of trouble with it, definitely feel free to reach out. You know who we are now. Definitely here to help, especially over this Christmas period. All right, so I'll jump in straight away. So when this tool comes out, just make sure you have a bit of a read of this instructions tab first. It sort of tells you there's a little steps through. We have tried to make it as easy as possible. And we have sort of really narrowed it down over the next sort of 2 or 3 months or 4 months, including November anyway. Particularly where that cash flow hurt is. Anything sort of outside that 90-day period cash flow is particularly challenging to forecast out unless you have some robust systems around P&Ls and balance sheets and some really good hygiene in there. Yeah, so we have really narrowed it down just that Christmas period. That's where the hurt is. Cash incoming slows down a little bit. And yeah, obviously cash, just continues to go out the door. So let's work through it now anyway. So just this first section here, the dashboard, it is broken down into 2 sections. We have this little graph or bar chart up the top here for those people that do like a bit of a visual piece. The red bars down the bottom are cash outflows. And again, here's just your denominations over to the left-hand side. The green bars over here are cash inflows. And what you want to keep an eye on is just making sure this blue line here continues to be above the 0 line here. So if you see it dipping down, there is a bit of hurt, a bit of trouble, and you do need to go a little bit deeper on that. For the people that like numbers in the analytics, this here is an exact mirror of this. So what we do in here is that this is the summary of the operating cash flows for the next sort of few months. So we have left November in here, so you can enter your closing balance in there from November and have a crack at forecasting out December, January, and February. So this here is just simply your cash balance. With this balance here, make sure you do include any cash overdraft as well. So if you have a 200K cash overdraft and you have 100K sitting in your bank account, make sure you put 300K in there. Because we do want to measure cash and I guess the leverage that is around that. Then with the hard work that you guys do in the background as well, this is your cash in, and this pulls through different sheets in different areas. This is your cash out, which is obviously negatives. And then opening cash, less your cash in, less your cash out gives you your closing balance. And that should be the closing balance at the end of the month. What you want to keep an eye on here is that particularly for your closing balances and the purpose of this cash flow is any reds. If it goes red, you definitely want to pull out that microscope and again, try and work out some strategies how you can pull that into the black. So just to summarize here, this is just the hard work elsewhere. So cash inflows, green bars, cash outflows, red bars, and the blue line is the net as to what happens overall. So just for this purpose here, we have just dropped in some dummy data. And look, this person here that we have used, they are in for a little bit of strife here, which will sort of talk on a couple of big levers you can work on to try and pull this cash flow back into the black. So just working down, this is the summary. And then just below this row here is all the details. So from here, we have cash receipts from customers. So keep in mind with this, unlike P&Ls, you do want to include the GST in here too, because we are talking cash. And this data here pulls from customer inputs. So in this customer input section here, Any cells in orange, you can sort of put down any clients you want to. You can put down ABC Co or whoever it is. It is completely free text. There is a little helpful hint here as well. And then what you want to try and do, you do want to try and measure all your progress claims or cash inflows over the next sort of 3 or 4 months. For the builders that are on the line here, I guess primarily, I mean, you'll know roughly when your progress claims are. You've obviously had chats with your banks, etc. So hopefully you can put in some pretty concise numbers here as well. And that just sort of flows down to this bottom line here. So you can put down any figures that you want. Again, try and apply a little bit of science behind it. But yeah, try and itemize out the different projects. You can put one line, just whatever you feel comfortable with as far as managing your cash inflows goes. We've also put down a little section down the bottom here, which is like the ad hoc payments. So like any like small jobs, ad hoc jobs, anything else that's sort of like minor and frequent that is in the background as well. It might be some cash flow boosts or, you know, whatever happens to be from the government. Might be a loan from mum and dad, whoever it is. You can put those cash inflows here and they sum down the bottom. So the sum of major projects in 190,000 plus the $15,000 ad hoc item here gives you 205,000 for the incoming cash. You come back across the dashboard, there's your 205. So I'm just demonstrating that it does link from here. Itemize out your projects however you want. You can include additional rows, as many as you need. I mean, it's like exercise. The more, I guess, the more effort you put into it, you know, the more accurate and the more valuable it's going to be for mapping out your cash flow. So spend a bit of time here. I mean, the cash inflows would generally be a little bit easier. I mean, you know what all your projects are running at, you know, ideally when the projects are going to be approved, especially progress payments. So do spend a little bit of time here if you can getting this one right. So coming back to the dashboard, what you want to do here is that we'll then have pushed onto cash outflows. So sort of cash inflows, we know that they are roughly right. So with outflows now, we've separated between payroll, ATO payments and loan repayments, and there's a special section down the bottom for creditors too. So what we want to do here is that with the creditors, there is a section where you can have a look at, and similar to cash inflows, we want to do the same with major creditors as well. So I'll loop back around to that one in a second. So with the payroll, you want to try and sort of forecast out your payroll as best you can. So this is the net pays that go out. And this is net wages. So this isn't gross. So this is after tax. And this is just the cash outflows that does leave your bank account. So try and apply a bit of science there. I mean, you know that annual leave's coming up too for those people that are lucky enough to be on salaries as well. You know, try and fold all those payments in there as well. We have pushed in superannuation too. So keep in mind superannuation is during the 28th of the month. You know, that's a pretty large quarterly payment. You know, look, and it's a bit challenging sort of coming out of the December, January period when cash slows down. For the next period, I mean, anything else like work cover installments, payroll tax, you know, a lot of those are monthly, particularly in Queensland. You know, you usually get a free kick for the first 3 months and they hit you for the last 9. So do try and put those monthly installments in there. Same with ATO payments as well, I guess loan repayments too. You know, anything with mortgages, loans, direct debits, you know, particularly anything around loans, credit cards as well. You know, try and plug in some numbers there. And then finally, the creditors, we want to try and capture the lumpy stuff or anything else that doesn't quite fit into this section here, ultimately. So pushing across to the creditors over on this side, exactly the same as customer inputs, you want to try and map out major creditors. So we have split this between COGS or cost of goods sold, you know, so plasterers, chippies, whoever it is, either build them out by supplier, or you can put them as one line, you know, whatever you feel most comfortable with. And what I recommend in here as well is that particularly with the comments section, try and put a couple of little notes in there as well, just to remind yourself as to what it is. Or you might have had a chat to one of the suppliers saying, hey, can we push one of your invoices back 20 days, 30 days, 60 days? Just a reminder that particularly if cash is looking a little bit rocky like it is for this person here, incurring a couple of red months. And then we've also applied overheads. So overheads are a little bit easier, a little bit more predictable. So overheads would be like, I guess, any admin staff, rent payments, rates, waters, R&M, anything else like that at all. And they're a little bit easier to map out. So make sure you do drop those figures in there and put down as many as you need or as many as you feel comfortable to, I guess, to really make this report sing to you, or I guess this sort of forecast model sing to you. So yeah, definitely take a bit of time here. Coming back around to the front, so we have 100K in here in November. We have another 51K in here in the ad hocs. Look, we're running a pretty lean business model here. We have 151K down the bottom, and that should link back to the creditors line down the bottom. And then if you have a look at total operating cash out, the 232 is the sum of payroll, ATO payments, child support, a few other bits and pieces, loan repayments, creditors, 232. And then that's the forecast out for the next 4 months. And if you come back to the top here to your summary, 80K opening, cash in 232, which does match the bottom balance here. And that gives you your net closing cash at the end of the month. So definitely take a bit of time to sort of work through that. Obviously apply a bit of science where you can. And yeah, good luck with it. So coming over to the side here, say you have pushed through as much as you can here, you're still sitting in the red. What we have also built into this financial model, for those that like to play with the numbers a little bit, is we have some levers. So to pop this out, just hit this little plus button in the top right-hand corner, pop it out, and we have scenarios. So we've done the hard work, we just can't get the cash flow to move. Come across to the right, we have our levers. So this first table over here is exactly the same as this table over here. It's just transposed out just so you can hone your focus down. We then have some levers, which I'll touch on in a sec. So we move the dial a little bit as far as like pushing creditors out or pushing sales out. And then this gives you a finalized scenario down the bottom. So say hypothetically you're still on the red, you go, hey, what if I can pull in an extra 10% of sales into the business between now and Christmas or whatever period it is, what happens? So we've pulled in an extra 10% of sales. And again, it's just to try and help you hone the focus. What does that do to our closing cash? So this is exactly the same. You pull in your lever. This is what it does, adding in 10% extra sales or 5%, whatever the number is. What does it do to my cash? Oh, hang on, we've only got one challenging month and the next month's actually okay. When we come across the creditors, we can do the same thing. What if we can sort of push out payments to our creditors, or, push out a payment to a chippy by 30 days or part payments? Can we get a rent abatement as well? Hey, we're struggling a little bit. Can we push out rents? And we'll sort of touch on big levers in a second. But if we can sort of push out creditor payments, what does that do? Even if you push them out by 5%, it might be a dual strategy. So just with two tiny pulls, and again, it's all well and good to chuck on a spreadsheet. It does show you where you can map out your cash flow to be in a future state. So this section here is that if you really can't get this section over to the left to go into the black, come across to the levers, and there's helpful comments all over the place. Have a play with it, and then we'll see where you can land from there. Look, that's about it from my end as far as the model goes. Again, I know I have pushed through it pretty quickly. There's a recording afterwards. The model's hard to break. Just make sure you have a read the instructions first. But yeah, again, if you're struggling with it or you just can't get it to work, you know where to find us. You have our details, and hopefully this has been pretty informative. And I will pass back to Mick if that's okay.
Of course. Thanks, Daniel. That was great. I know it was a pretty quick run through. I think that it's fairly intuitive tool, and we don't really want to bore everybody with going over it in great detail today. I think the goal was just to give you a bit of a helicopter view, if you like. And then, as I said, it's quite intuitive. So get on, have a play with it. If you need some help, just reach out. But it is relatively easy to use. And whilst it might seem a little bit simplistic in many respects, it's actually very, very effective. I had a client who owed the bank about 10 million. God, I'd hate to owe that sort of money. And I think they lived on a daily cash flow for 3 years just to survive, where they would just plot everything out daily. So we've got the two tools there that you can use. One is the monthly, the other's the daily. Very, very effective. Very effective in relieving anxiety as well, because at least you can sort of see into the future and have a reasonable idea of what it's going to look like after Christmas, without relying on, writing down on scraps of paper and gut feel and emotion, which is how a lot of people run their businesses. So great little tool. And I just wanted to talk now, we're going to run through 8 levers. So I'm going to do the first 4, and we're going to start off. So the levers that we're going to talk about today are emergency planning. So we're talking the first 4, if you're in a very, very tight situation, which some people are at the moment, then what's your options? What sort of levers can you pull quickly to get you through the next short while? So the short-term planning we're talking here. And sometimes this situation can get quite, dire. We were working with a builder last week who's unfortunately, only option was a second mortgage at 25% on 450K. That is about as ugly as it gets from a cash flow perspective, to be paying 25% on 450 as a second mortgage. But hey, you do what you've got to do to survive. So if it gets that bad. So some of these levers that we're suggesting may or may not be appropriate depending on your circumstances. Your situation might not be quite so bad, or it might be quite difficult, in which case you can pull some of these levers. So the first one is ATO payment plans. So this is really interesting. Since COVID hit, pre-COVID, interest rates with ATO would go up and down with the market. I think, they got as high as about 10% at one stage, a bit less these days, but still quite brutal compared to, say, anything that's secured against real property. They don't want to make themselves too attractive as being somebody that's owed money. However, what I will say about the ATO, and I know a lot of people don't say great things about the ATO, but I've got to say, during the last couple of years, during the pandemic, they've been very, very accommodating, no doubt under guidance from the government, of course, but they've been very accommodating, quite easy to deal with, and very supportive. And some would say so they should be, but they have been excellent to deal with, and I think they've done a great job. So if you are in a really bad situation, pre-COVID, your options were with the ATO payments was 24 months was the maximum typically, and you'd be on interest rates around that 7%. Post-COVID, if you are COVID affected, which a lot of in the building construction industry have been COVID affected by supply chain disruption, couldn't get that out, then my experience with the ATOs post-COVID has been quite interesting. They've been very accommodating, as I said. Typically, you can get 36-month payment plans, and I've had a lot, or the firm's had a lot, come through at zero interest. So 0 interest, 36 months. So what do? If you're really in a lot of strife, you default with the ATO, ring them up and ask for their support, and you'll be surprised of how accommodating they will be, or likely to be, based on your history. And ask for 36 months, and ask for you tell them you're COVID affected if you are, and ask for interest free, and you might be quite surprised. So even if you're on a 24-month plan at the moment and you're really in the strife, just default on your next payment. So that's option one. Another emergency plan would be to draw down on loans. So for example, if you've got offsets, you've got access to equity in your home loan, draw down on them. If you've got good credit and decent amount of equity, a lot of people that have got homes at the moment, just their equity shot up through the roof, so they're in a position to borrow. Banks are ready to borrow on obviously on real property, on houses and so on. You get more funding quick. If you need unsecured funding, there are so many options out there these days. Prosper, Buildxact. There's a bunch now that'll give you short-term unsecured funding. Horrendously expensive. It isn't a long-term solution, but certainly it's going to get you out of a bind. I think Prosper will go unsecured to about 50, might be a little bit more. Same with Buildxact. Interest rates, look, mid to high teens. Yeah, brutal, but if you need to get out of trouble, that's where to look. The third option in our emergency planning levers that you can pull, making payment arrangements with creditors and banks. Seems obvious, I know, but one of the things you don't want to do if you get into strife is stop communicating with your creditors, and you'll be surprised how accommodating people will be as long as you keep talking to them. Once you stop talking, then people fill in the blanks and take whatever action they've got to take. But typically I find that most people will work with you if you're in strife, and the banks will work with you in strife too. So get on the phone, of course, and start making payment arrangements. I know you're kicking the problem down the road, but sometimes you just need to kick the problem down the road, particularly when the revenue side, the incoming receipt side stops or slows right down over Christmas. My fourth one is quite a simple one, is just sell underutilized assets. I see it all the time. You got too many cars, too much plant and equipment, whatever it is, and just get rid of it, flick it. If you're not using it, flick it. It's not getting, typically none of those types of assets are going up in value sitting around, so get rid of it. I think that's it for my 4. I'm going to flick back to Daniel. He's got 4 more to share with you. There's a whole bunch though on the tools that we've sent, so you can, just ideas for you to spark some thoughts about what you might be able to do to get through to plan out your cash flow. So, and Daniel's sort of more medium term. So I'm going to flick back to you now, Daniel. Take it away.
Yeah, thanks, Mick. Appreciate that. As Mick has sort of segued into now, we sort of come into the medium-term plan, or I guess the medium-term planning. So once you sort of get through the cash hemorrhage that is Christmas, what's next? So this is sort of short, medium-term horizons, I guess a couple of months, 3-6 months out. The important philosophy here, cash is oxygen. If you run out of it, you don't make it. And look, that's critical for businesses everywhere. So look, I mean, a tactic that I have sort of seen work really well elsewhere is, and look, it sounds a little bit silly, is but having individual bank accounts for individual liabilities. So what I'm talking about there is that, as you incur wages for different employees, it could be a $50,000 wage, you might pay out $30K in cash, and then that you have to pay out the pay-as-you-go withholding tax, down, I guess, a month later, or superannuation a quarter later. So what I have seen with some clients is they have, 4, 5, 6 bank accounts. They have it called, pay-as-you-go tax, superannuation, and then if you can interpret your balance sheets reasonably well, because that's where your liabilities sit, people just transfer cash around into those other little holding accounts and isolate it or quarantine it out. So when you do get that big BAS bill, or get that big superannuation bill, it's coming. It's unpleasant, but at least you are planned for it. So that is an effective strategy I have sort of seen people use. So that way you don't get it mixed up into your operating cash as well, particularly if you don't look at your cash flow daily, or I guess your P&L, religiously too. The other piece that Mick did touch on lightly too is refinancing where you can. So look, I mean, loans tick away in the background pretty consistently. Direct debits come out, but when was the last time you did refinance? I mean, interest rates are pretty cheap at the moment. Have you got several vehicles and several different loans you can package up under one option, and then pushing out those loans to where you can. So look, in my opinion, it is sort of better to sort of push out those terms longer. If you have the excess cash, pay them up quicker. Look, that's up to individual people for individual strategies, but when was the last time you did look at refinance? Could be a house, could be an asset, could be cars, whatever it happens to be. So definitely have a chat to your broker, or I guess preferred partner around that one. Pretty important, and a bit of, I guess, low-hanging fruit. The other big one, which does get overlooked, and I sort of see it time and time again, as well as overheads. So I'm not talking about COGS or, people, subbies, etc. This is what ticks away in the background. So it could be rent, or it could be subscriptions, stuff that gets direct debited from your bank account. When was the last time you had a bit of a review of that? Because it's easy to sort of sign up to all these subscriptions and other bits and pieces, advertising, Google AdWords. It's easy to watch the cash go out, but when was the last time you had a really good review? Do you know everything that's coming out of your bank account each week, each month, each day? And then the other piece as well, particularly like Google AdWords and advertising, just make sure you have a bit of a strategy with that, because it's easy to have those sort of direct debits come out. Just make sure you are trying to get some sort of ROI on that, and that you are measuring it. But yeah, look, it's really important not just to review, up to gross margin, but obviously review what's sitting in overheads as well. The other final piece too is just a bit of hygiene around, I guess, progress payments too. So we're spending a lot of time on cash out, but it's really important to just keep revisiting cash in. For certain milestones, I guess, in progress payments made from banks and clients as well. Just make sure you're really across the timing of those when they land, you're really clear on your obligations as to what you need to deliver. Because we sort of, well, particularly from my side, I do see it a lot. So you put a progress claim in, it could be worth, 6 figures plus. The bank sort of pushes back on and go, oh, you're missing one, but you're missing that. And it does type a lot of free cash, particularly on the cash in, and it can create a fair bit of hurt as well if you don't have either a good cash buffer, or anything else like that in place, or, I guess like a quick debt facility you can lean on too. So again, just a bit of a hygiene piece, and obviously Buildxact helps with that too. It is pretty intuitive, pretty informative. Yeah, it's just make sure you're doing your homework on the background as well. And that's about it from my end. Julian, I will pass back to you, please, and thanks.
Thanks, Daniel. Thanks, Mick. Really appreciate that. Some really good advice there, especially coming into Christmas. With the way the last, probably not for you guys as much, but for us down in Victoria, and probably for the guys in Sydney as well, and in New South Wales, it's probably been a little bit tougher. Guys, I'm going to take you through a little about Buildxact on the job costing front. I'm going to hop into kind of show you how you can pull out some of the purchase ordering information. If you want to take this information out of Buildxact, you can do that. Bit of a workaround. We don't have a cash flow report directly in the software, but using the tools that Daniel's kind of gone through there, you can actually take that data out and pop it in and sort of give you a rough sort of position of where your cash flow is. So I'm going to quickly share my screen again. There we go. Share screen. Just hopefully you guys can see that at the moment. Now, I'm not going to go through the full workflow of doing an order and whatnot. I'm really just kind of talk to you about the job costing side. Then I'll hop into the actual orders themselves to show you where you can get that information out. So you can see I've done some purchase orders that I've completed. So this tick is the ordered section, and it's just showing me what each one of those purchase orders line by line were costing what we expected to pay for it. So for the other three here, you can see that I've run exactly on what I estimated that cost to be. So all of these figures are all based on your estimate. So when I went through Buildxact and I did my take costs and I estimated all my costs, and I sent that quote to the client, what am I paying for it now? And a lot of the problems that people have is they don't use a system, so they're estimating manually. They're continuing the job. They're potentially losing some money that they don't realize they're losing money in. Because they don't know, they just continue estimating incorrectly over and over and over again. And then you get to a certain point in time where, like 2020 and 2021, material price rises go up, labor shortages, heaps of other problems as well. And, builders, before they even start the job, they're already lost 5-6% of their profit margin. So we kind of just help you, see where that's going. So all these other three items were perfect. 14% over on this one. So obviously $368 is not really a big deal on a whole job if it's a big one. But you can kind of see how little increases over the course of a job can potentially hurt your profit margin long term. So the way we manage that is we'll highlight that for you in red. You can pop a little note in here. And what you ideally want to do, if it's things like a price rise on the materials or a labor rate that you don't that you hadn't estimated for initially, go back into your template, update your template or your price list. That will then feed directly into that template, or anything you quote from that template will have that new price in there. So it's not one of these things that you're just making a change in here and it's not going anywhere. Go back in, make the change, make sure that you're quoting correctly moving forward. And that will then give you a much better position of where you're roughly likely to finish on that job, provided there's no other surprises. And also from being able to look at it, you can kind of say, well, I want a 20% margin or a 25% margin, but I want to win this work. I might want to drop my price a little bit. If you're dropping your price to win a job and you don't know exactly where you finish on an average of 3, 4, 5 jobs or whatever, you're kind of dropping your price blindly, really. And then, like I said, you get these issues that crop up, which we've kind of seen with the materials and labor shortages, and it can really hurt your bottom line. So, obviously, I'm not saying you sort of have to use Buildxact, but you really want to be trying to get on how this works. So we provide this information line by line. So you can see this here is for the actual bricks themselves. We provide it on the category and the job overall as well. So, generally with the way these categories are broken down, most of them tend to fall under one type of subby or supplier. So you can kind of fairly easily figure out, okay, well, I've gone 10% over my brickwork budget. Why was that? What were the reasons? What do we need to do next time to make sure that doesn't happen? And as we're doing this, as we're ordering all these materials, we're effectively creating an order list inside Buildxact that's getting sent out to your suppliers or your subbies. Now, what that does for us, if I go into jobs here, I can see orders. Now, you have to excuse the fact that this is a dummy account, so everything here is the same, because when I'm demoing Buildxact, I tend to use the same example over and over and over again, so it looks a bit weird when you're seeing it. But what you can do, you can actually go into the software and raise all these purchase orders at the start of your build, and raise them all as unsent purchases. You can actually send them to the subby or supplier. Now, if you fill that information in correctly, what you can do is you can export all that data, take all those purchase orders that you're planning on sending, do the same thing from your sales invoicing. If I can go back into jobs here, let me just open that back out again, jobs. So you take all that stuff from the order list, you export it. And if we go into the job again, and my internet is dying as I'm doing this. we can see the outgoing invoicing. So these are what I'm expecting to charge the client or to the bank, obviously, if it's generally a new build. And you can put that information into Daniel's spreadsheet there, and you can roughly get an idea of where your cash flow position is going to be. So again, we don't have that in Buildxact, but we do give you the data to actually go in and enter it in. And one of the things I've always said with, I used to work at MYOB, a few years ago now, and I worked with a lot of accountants, a lot of bookkeepers, and my thing telling to them was, if you're working with clients, try and work in one area, get really, really zoned in on that knowledge, become an expert in that position, and you can actually talk to your clients from a real position of knowledge. And, that's what the guys at Xact Accounting do. They specialize in that building construction space. So, that talking to them will give you a real indication of, things that you can do in your business for people that actually work with builders on a daily basis. Not saying that other people can't give you good insight, but generally you'll find that people that try and have too many spinning plates aren't able to keep them all going at the same time. So, you can take this data out of Buildxact, pop it into that spreadsheet, and you'll be able to see roughly on where your cash flow is sitting at any point in time. But guys, I don't want to talk too much about the Buildxact system. So for those of you who don't know, it's an estimating job management system, online takeoffs. We've got integration with some huge suppliers now with Mitre 10 and Dalston's in there as well. The job side is schedules. It's moving the schedules around to suit you and your build. It's sending notifications to yourself, subbies, suppliers, the job costing and the ordering of materials as you saw, and then the invoicing, and then we sync back into the accounting software. So Xero, MYOB, and QuickBooks. But if you've got any questions, you can always feel free to reach out to myself, Julian K at buildxact.com, or just hop into our website and just sign up for a trial. But I might bring back in Daniel and Mick, if that's okay, guys. There we are. Anything else that you guys want to add that I maybe didn't cover off? Did I say that correctly, Daniel, in terms of exporting the data out of Buildxact into your spreadsheet?
Yeah, I think so. Yeah, I've been using the system a little bit now. Obviously, thanks, Julian, for the segue in. There's some really, really powerful reporting that you can get out of it too. So, it's similar to exercise. You get out what you put in. So if you're really methodical with your planning, your build-ups, takeoffs, etc., this system then automates your PO processes, and that's how you build your cash flow up. So if you're pushing out 100K worth of POs and you receive it in 80K, and your hygiene is really good around it, and I guess you're paying people on time, and there's still 20K, there's always a couple of subbies that do drag the chain. You always have to chase, give us your invoice, but it's the whole no surprise rule. You don't want to get 2 or 3 months, get to February, think cash is okay, and then surprise, here's an invoice for 20K for air conditioners that you missed. So as long as the disciplines are, pretty strong on the Buildxact side, it does flow into Xero, MYOB, a couple of other partner softwares, you can get some pretty strong cash flow reporting out of it.
Yeah, definitely. And Daniel, we had a webinar about 3 months ago now, and as well, it was one of a coach, and he was saying that builders often think they make a lot more money in busy times, but they actually tend to be losing money, and they're getting money coming in, out, that you don't actually realize that you're actually in a really bad cash flow position where that money stops coming in. Have you guys seen that happens in the industry at the moment?
I'll answer that one, Julian.
Yeah.
Honestly, it's one of the so I've got these bunch of stories that I've got about builders that I've built up over the years, and I always say that it's easy to build 1 or 2 houses on the go at once, or one's really easy, obviously, because you're there swinging the hammer, and you know every cost, and you can pretty much do it in your head. But if you want to scale that at all past one, it gets really complex really fast. And if you go back, not that long ago, 10 years ago, tools like this just weren't even close to what they are now. And they're expensive and difficult to use and so on. So you see it all the time. We just time and time again, we see a builder who comes in and we say, what margin are you chasing? And he'll give you X, might be 20%. What are you getting? The typical answer to what you're getting is either I don't know or about, or they sometimes say, yeah, look, we're getting XYZ, and then when we do a deep dive, they're not. So it's, if you can utilize a tool like Buildxact, it's the perfect tool for chasing your margins around, to making sure that you're going to get your margin that you need. And if you can get the margin that you need to get, and in custom building, we'll call it around that 18-20%. Renos, we'll call it, in anything north of 20%. then you'll do fine. It's the builders that are getting 10% and 8% that are the ones that are doing really poorly.
Yeah, and one of the big things we found as well is that people often don't understand the difference between markup and margin.
I know, it's so frustrating. It is a little bit frustrating that, but you know, some people just haven't been given that information. But you see it all the time. Yeah, people say I'm getting XYZ margin, and it turns out it's a markup. And of course, the markup is the margin's going to be a lot less than the markup. And so you can lose 3, 4, 5% just on not applying the correct maths.
Yeah, absolutely. Shall we see if we've got any questions in there?
Sure.
Normally there's a few in there asking me if it's recorded. So I reckon I've done my job properly this time and said that it is being recorded. So I haven't got any of those questions in there. Haven't got any questions, which is unusual. From guys, what I might do. I've just seen someone's got their hand up. I don't know if I can. Dave, I'm not sure if you can see me on there coming through, but maybe if you didn't mean to put your hand up, maybe you can pop a message in.
How much cash I have in reserve? I think I can see a couple of questions there, Julian.
Can you?
Yeah. So we've got.
Sorry, they're in the crescent. Yeah.
Yeah. I think I did see one. Now it's gone missing, but I had one say, I think it's in the chat bar saying, you know, what is the difference between a markup and a margin? Did you want me to grab that one?
Yeah, go ahead. Yeah.
Yeah, so I guess the easiest way to explain it is to use the maths of a markup of 100%. So if you buy something for $100 and you apply a 100% markup, that means you're going to double it and you're going to sell it for $200. Doesn't sound like a builder, I know. Sounds like a clothing retailer more likely. But if you go from, the maths does work quite easily. So you go from $100, you sell it for $200, you've done 100% markup. The margin is 50%. So the margin is the bit that you're going to keep for yourself, and that's $100. So 100 over 200 is 50%. So to use some sort of, you know, maths that's not as clean as that, if you mark up by 68%, you will get a 40% margin or GP. So the words gross margin, or GP or gross profit, all of those words can be used interchangeably. They all mean the same thing. Whereas markup, it means something different, which is obviously what I just explained. So I hope that makes sense. It's really important though, when you're chasing a 20% margin, you're going to need to mark up by about, I don't have that maths off the top of my head. I know how the other pieces, but you're going to have to mark up by about 25%. Yeah.
Perfect. You explained it a lot better than I would, Mick. That's why you do the numbers, right?
Yeah. I'm the numbers guy.
So we've got Phil. How much cash should I have in reserve?
Yes, that's another really good question. And my answer to that is depends on the style of business that you've got. So typically it's a multiple of your monthly operating costs. So let's say it costs you each month to run $100,000. It costs a nice round number, $100,000. I think if you're doing the style of business that, if you say custom builds, large, expensive custom builds, north of 700 residential, we'll just use residential custom builds at the moment, then I think you need to hold a higher cash buffer. And the reason I say that is because if one of your projects gets stalled and you can't make a stage for billing, or you run into a dispute with the owner, you're going to need a lot of money to survive that. So the risks for you are much higher. So I would suggest that you need 2x, 2 times operating costs, or 2 months worth of operating costs. So if your operating costs for a round number 100,000, you need 200,000. If they're 400,000, you need 800,000. So if your turnover is 12 million, you're going to need up to 2 million to survive that, and have a lot of room for comfort. Yeah. However, if you're say, we've got a few of these, awesome little bathroom renovators. They just specialize in bathrooms and they just knock them out one after the other. Really low risk. If you get into a dispute or problem or whatever with your customer, 10, 20K, it's not going to kill you, that one dispute. So a customer, one single customer is not going to bring you to your knees, or shouldn't. And in which case, I think those types of businesses are much, much lower risk. They're much quicker. The throughput, the billings are much quicker. And in which case, I think 1x, 1 month's worth of operating costs. Is that a good answer? Does that make sense?
Seems like it. I haven't responded yet, but we'll wait. We'll wait. So Dave, I think this one is for me. So it'd be good to have an anticipated invoice and due date for the pending invoices. I'm assuming that's exported data. Yeah, so Buildxact. So yeah, look, I'm not saying we do everything 100% perfect in there. From the invoicing side, from our side, that is in the sales invoicing, you do have your default due days in the system. So 14 days, 30 days, whatever that will be. From a subby or supplier, so your bills, your purchase orders that you're effectively going to be, when they're going to be, need to be paid. We don't manage that at this point. Well, we have a date required, but that's generally for delivery or when the job needs to be done, rather than when the actual payment needs to be there. So yeah, point taken. We don't do that at this point amazingly well. Generally, there's a bit of a manual element there. If you export it, put a new column in, pop in when those dates are due. It's a little bit of a workaround. Apologies, Dave. We don't do that currently in an amazing way.
Just on that, Julian, I'll probably give you a bit more of a hand here. I mean, where you probably get a bit of disparity is that with the POs, you probably can't put in a estimated payment date. You're particularly talking suppliers on that side, but what you can do on the Xero side, the MYOB side, is that once you raise a PO, receive the invoice in, it pushes the data across to Xero and MYOB. And if you set up your suppliers correctly in Xero with your debtor days or payment days or payment terms, it won't really help with the PO. But once you get the invoice in, and you have 7 days, 4 days, 21 days, you won't get that sort of 3-month forecast, but you can get up to 7, 14, 21, which does give you a little bit of visibility on there as well. So as long as your data is good in Buildxact and you're using and leveraging it, you're doing your POs, you're receiving them on time, the data's going through, you set up Xero correctly with the correct, payment terms. Again, that's that hygiene piece, the exercise. If you put in the effort, I guess you get the clarity and the cut through. It won't be perfect, but it should really tighten down that sort of 7, 14, 30-day timeline horizon. So there are a couple of synergies you can get out of your accounting system as well.
Well, that's where you guys come in. I work for MYOB and I'm still rubbish at the accounting side of the software. Thanks, Daniel. Appreciate that. Let's see if we've got any more in here. I thought I did see. Oh, we do. Yeah, here we go. Molinar, or if I'm pronouncing that name correctly, hopefully. How to improve your options to get a loan for the business that is in some trouble and certainly. Oh, it's just moved there. How to improve your options to get a loan for the business that is in some trouble and certainly not looking in mortgaging for 25%. That's seriously dangerous. Are there ways that the lending authority, that future contracts are the assets relied upon? So yeah, 25% is a lot to remortgage a home.
So I'll have a crack at this one if you like, Julian. Yeah, 25%. Oh my God. That guy is just been in a high-speed car crash and we've got him on the side of the road with a defibrillator, right? That's you're running out of options when you get to that point. And so, yeah, I agree. 25% is about as ugly as it gets. I think the question is, can I rely on something else other than a house or real property to borrow? And can that thing be the future contracts? That is really unusual for banks to rely upon, particularly with small business. Big business is a bit different. Small business, for a bank to provide lending across future contracts is very, very rare, unless you've got an awesome little business that's pumping out a heap of reliable money, and then they might do that, but pretty rare. I think if you can't or don't want to mortgage your house, then the most likely way that you'll get funding is unsecured. And unsecured, typically, if it's small, like i.e., 50 or less, 60, 70 or less, then you can get that. Mainstream banks are quite reasonable with unsecured at the moment if you can get it. If your credit is not so great, the likes of Prosper, Bizcat, these second, third tier type lenders, they're everywhere these days. They're pretty keen on a bit of risk, and you'll get something off them fairly easily. But you're going to have to pay sort of mid-high teens in some instances, around 15, 14, 16, 18%. Bit brutal, but depending on how much strife you're in.
Awesome. Thanks, Mick. So Phil, how do I factor in price increases from suppliers? I think that's probably from a Buildxact perspective. How you manage it in our system is a few different ways. You could go in and increase your markup that you have on each individual line. You can do it on the category, or you can do it on the job overall, and just maybe you want to add a buffer of a couple of % on there. Alternatively, you can go back in and update your pricing in there. So if you've imported that in via Excel, or you've created it inside Buildxact, go and update it as soon as you know that price has increased. See it all the time. People know their price has increased, and they're quoting out 3-4 more jobs. Like you lost margins straight away by doing that. So that's how you manage it in our system. Obviously, it's impossible to ever be completely accurate. You're never going to have 100% on absolutely everything, but you just want to set yourself up that you might make some wins and some losses during the job, but you don't want to be making losses on on everything. So yeah, and just do your job costing correctly if you are using our system, and just make sure you're tracking it. And I worked for a builder who's based in Victoria, and he coaches other builders in an estimating course. And he pretty much said as soon as anything goes red in his system, he's straight onto it, going, why is it red? Why is it red? And he looks into it and everything. And that stops him having issues in the future. And if something goes wrong there, he knows that if it goes massively wrong, there's a potential for a cash flow problem, and he's ahead of that as well. So it took 1 or 2 people to ask a question, and then you all roll in. It's like everyone's waiting for the first person to go. Yeah, it's a great topic with the cash flow. I think me in my personal life, I'm feeling that with Christmas. I feel like every year I spend $500 on decorations, and the next year I'm buying them again. I'm like, what? It doesn't look any different in the house. So I don't know where all these lights are going. Every year I'm buying them. And for the people that are putting out their Christmas trees in mid-November and you don't have kids, shame on you. It's December when you end of November, December's your Christmas tree, and that's when that goes up. I think that's it, guys. I don't think there's any. I'm not sure if I've missed anything there. No,
I think you've got them all.
Awesome. There was Ricky. I'm not sure if you can still hear me there, but you've got your hand up on the thing. I don't think I can let you talk on here, but if you do have a question, mate, just maybe pop it into the chat. I'll give you a minute or so. I'm not sure if that's the hands up there by mistake or not, but it doesn't seem like there's one coming. No, I'll just maybe assume that hand's up in error then. But guys, thanks for joining. It's been a great little chat with the guys at Xact Accounting. Thanks, Mick and Daniel, for coming on board. I really appreciate having you on. From us at Buildxact on our side here, Merry Christmas to everyone. This is the last one I'm going to be doing because I'm going to be finishing next week. I think Mick is counting down the hours. Is it 24 hours now, is it? 25?
It's 25 now. Yeah.
25 hours until you're finished. And Daniel, how long have you got left?
Too long, mate, is the short answer.
Yeah, are you one of those that are working all the way through?
No, I am going to take a couple of weeks actually. Which would be great. I haven't had like a Christmas period off in a few years, so the boss has been kind enough to let me have a breather, and then come back and regroup in the new year, which would be great. Yeah, everyone that says, "Oh, I'm working all the way through," they're taking 3-hour lunch breaks. That's the
they're not working.
All right, guys, thanks. Really appreciate it. And everyone listening online, Merry Christmas. Happy New Year.
Merry Christmas. See you, Julian. Thanks, guys.
Thanks, guys.
Bye-bye.
See ya.